we are getting and the IS 29 of the IFRS, which is defining the particular inflation in the words like this. This is hyperinflation as prices. Interest and the wages linked to a price index rising 100% or more cumulatively over 3 years. It means sometimes we are getting the words from these IFRS or these particular associations, and we are getting such kind of the definitions in respect of the accounting associations and all, and how we are determining the particular price index relevant to this. Now see here, the system, whatever it may be related to this, the accounting system, which is recording all the economical and the financial activities, and whatever the activities which are related to the business to determine the particular current cost, and this current cost is known as the inflation accounting. Another way of defining the particular inflation accounting is that this is nothing but it is one of the historical costs which are changed on the basis of the current cost. It means that you have to update the particular cost, and that is nothing but the historical cost are changed to the current cost. That is means the updation of this particular cost that we are also getting. So what are the objectives and how we can face the importance of inflation accounting, let me say. This is the first point that we are going to reflect here, true financial position. So this is indicating that this is one of the object of our inflation accounting. So how we are showing the true financial position of the business by reflecting all books of accounts at current prices. So whenever you are maintaining all the books of or the records, you have to go for the particular task. Yes, what type of the prices that we are showing in the books, and whether they are related to this particular economy and all. Whether we are maintaining the particular business in respect of that, and how we are putting the particular prices in our books. So it adjusts all record as per the price index for determining real profitability. So here it is very important. Current price index is very important. So in respect of that, we are going to calculate some of the figures, and then we are getting there is a what is the current cost of that particular any other product. It is avoiding profit overstatement. It avoids the profit overstatement. This is the second objective, and it is indicating also the importance of our particular task. So what do we mean here in respect of this? See, whenever you are doing the expenses or getting such kind of the income, we are considering that at current values. And when you are going to consider all the values at current prices, current values, then we are getting the avoidance of this overstatement of profit. Sometimes we are getting there is a in the eyesight like that also. We are taking into consideration the past values, but when you are taking into consideration whatever the after inflation, there may be whatever the current prices are there that we are going to take into our financial statement, then it will not be a possible the obstacle to the particular statement. And that's why whatever it may be the avoids profit in respect of this that we are going to avoid. Correct amount of depreciation. This is another task in respect of the objective. Inflation accounting charges correct amount of depreciation by calculating it on present value rather than the historical value. It means it is giving importance to the present value. What is the current situation, and how we are going to get the value of any other the depreciation. So it is giving importance to the present value rather than the historical value, and it will be helpful in case of the replacement of the asset. So we can easily replace our assets by considering the what is the exactly the depreciation at current situation. Another part which is related to the easy profit comparison. Easy profit comparison. Sometimes different kinds of the activities are considered by the business, and on the basis of that we are getting the performance of the particular company or the business. So the inflation accounting also the same, and this is avoiding This is avoiding the distortion of historical data by adjusting some of the effects of the price changes in respect of the expenses, in respect of the income, which are showing to the financial statement. So generally we can get it, yes, how we can determine the particular task, particular figures in respect of this particular. Then true and fair information, it is one of the objective of our inflation accounting. And always we are in behind of getting such kind of the fair information. Why like that? Because sometimes we have to provide such kind of the information to the shareholders and the employees. Sometimes it may be for the government purpose. So at that time, we are providing true and fair information based on the present price level. So what is the current situation and what are the present price levels? So with the help of this present price level, we are providing information to the shareholders and the employees. So it will give, yes, the determination of the dividend policy in respect of the shareholders. Sometimes if suppose there may be the true and fair information is to be provided for the purpose of getting high level of salary or the wages to the employees. And that is why if suppose there may be the current whatever position that we have to reflect in respect of getting the advantage to these particular shareholders and the employees also. So the inflation accounting having certain kind of the different kinds of the objectives and it whatever the points that we have raised here, it also shows the importance of it also. Now we can look to this, what are the features of inflation accounting? Like that also importance and the objectives we are getting. Again, there is a some of the repetition of the some of the points and we can get it. There is a whatever points which are not covered in the objectives, we are getting set. Now see, there is a first point we are getting here. Again, there is a present true position. It means that whatever the current price index is there, that we have to consider to present and reflect the true and fair financial position. This is one of the feature that we are going to get. And it helps to update our financial statement. And without this current price index, it is not possible to reflect the financial position. And that's why for updating the financial statement, there is a requirement to get the help of the current price index also. Second thing we are going to consider, there may be the comparison that we can make that called inter-period comparison. So how you are getting there is a inter-period comparison. So as usual, we know that always we are preparing some of the financial statements like the profit loss account and the balance sheet. And we are going to consider, yes, what are the values, current values of this particular profit loss account statement as well as the balance sheet, what are the items which are related to this particular balance sheet as well as the profit loss account, and how we are getting there is a comparison. It means what's happened in the past, what's happened in the current, and we can easily compare the how much profitability we gain in the last and how much profitability we are gaining in current situation. Like that also income and expenditure, how many expended in past and how many we are expending in current. Like that, we are going to compare the whatever the items which are related to these financial statements to take the future decision. So this is indicating that this is nothing but it is one of the characteristic of our inflation accounting. As usual, we have taken the objective remove distortion. Same like that also, we never focus again on this particular part. Avoid misleading dates. Here it is nothing but due to the historical accounting, whatever the data we are showing, it is indicating that higher profitability in business. And sometimes we are on the other hand, employees are also demanding the huge wages and the salaries. Sometimes what's happened, see, there is a financial position is good and people are thinking that yes, why not the wages are paid by the owner at high level. So at that time, we are not thinking that whether the whatever the reflection of the financial statement, it is true and fair. So this we are not going to consider. And that is why that it may be there is a misleading to the employees also. Because whatever it may be the situation, whether this situation is good to us or not good to us, that we are going to reflect very easily. But this inflation accounting system never such kind of the whatever it may be the misleading things are there in respect of the employees as well as the owner of that particular company. It cannot happen. Another part is that efficient decision making. It means that if you are providing the true and fair picture of your business organization, what will happen? It will be very easy to take the certain decisions regarding to the management. And that is why, if suppose we are getting such kind of the information in a right time, we will take very effective decision in respect of this. Another point is that inbuilt automatic mechanism. So we have to face there is a automatic mechanism. See, so inflation accounting has inbuilt an automatic mechanism. So to do the adjustments as per the changes in the price level, and according to that, we can update our books of accounts. And if suppose there may be this is the system that we can say. So for getting such kind of the financial position, we get such kind of the automation of the particular things, and that is why this is nothing but it is a one of the part of our inflation accounting. Now we are looking to the what are the very important points related to this inflation accounting, and that is methods of inflation accounting, or we are saying that also the accounting for price level changes. So what are the methods that we are going to study in this particular case? So generally the price level changes is classified into two levels. One is that general price level changes. Another is that specific price level changes. And in respect of the general price level changes, we have to know that there is an increase or decrease in the value of monetary unit. It means always we are facing there is a overall increase or decrease in the value of monetary unit in respect of general price level changes. It means that we can get there is a wholesale price index, that is we can say that in very short, that is WPI, or consumer price index, it means CPI. So generally we can consider wholesale price index or the consumer price index in respect of this. So this is called general price level index. Now, specific price level changes. What is the specific price level changes? This is nothing but it reflects to changes in the price of a specific asset. And that is why it is indicating that specific price level. It means that we are going to get only the specific asset. Maybe suppose there may be one of the furniture, maybe land. Now see there is what's about the land? What is the value of the land? What is the current price of the land? So generally, after this corona or any other situations, what's happening to this? Now see the number of changes that we are facing in the economy. And that is why there is a certain assets or certain type of the commodities, it may get increased. So what are the changes in the price level that we are finding in a certain specific assets also? Like that also, these particular assets which not following the same trend of the WPI and the CPI, that is the wholesale price index and consumer price index. And that is why these whatever it may be the changes we are going to consider that cannot be considered in respect of this inflation position very true and fair manner. And that's why we are going to consider the other methods like that CPP method, that is current purchasing power method. Current purchasing power method, or it is called as the general purchasing power method. So this particular method is going to consider for the purpose of understanding the inflation accounting. Second is that current cost accounting method, that is called CCA method, which is based on the changes in price level of specific asset. And the third one is that there is a hybrid method. It means the combination or the mixture of the CPP and the CCA method. So these three methods are we are going to consider in inflation accounting. So generally see there is a CPP power, that is a current purchasing power, that is called the CPP method or the general purchasing power method. This is the first method that we are going to focus now. Now see what do you mean the current purchasing power? So this is as we have shown in earlier, yes, it can be considered as the general purchasing power method. So this particular method is seeking for restating the financial statement of the business in terms of units of equal purchasing power. It means that whenever you are going to consider the CPP method, it cannot having any effect of change in the money value. But whatever it may be the limitations which are related to that, it is overcoming the limitation of the money changes value from time to time, and then we are getting there is a such kind of the inflation rate. So according to this particular method, very in a simple sense, we can consider that the items in the financial statements are converted into new figures. New figures. It means what? On the basis of the general price index, whatever given in time or date. So according to that particular, suppose the year we are going to consider 2010, 2011. So it is indicating such kind of the price level change. Similarly, 2020, 2021. So in this particular period, what will be the price index that we are going to consider? So we have to convert whatever the financial statement, what are the financial statements are to be prepared on, and whatever the items which are in the financial statements that can be turned, that can be changed, that can be converted into new figures on the basis of the given figures. What are the merits of this particular CPP? See, it is indicating that this method is adopting for the similar unit of measurement by taking into account price change. It means there is a no like that. It means you are going to consider one of the unit for the uh, commodity or any other product. There may be the differentiation, but there is a no differentiation here because we are using the same unit of measurement to all. And that is why we are getting there is a similarity in the measurement also under CPP method. Secondly, there is a historical accounts. Historical accounts continue to be maintained under this particular method. So this particular statement which is prepared under the CPP on a supplementary basis. It means historical accounts are to be considered as well as such kind of the under the CPP method. All the figures are to be maintained, but it is on the supplementary basis. Again, it facilitated the calculation of gain or loss in purchasing power. So what will be the change in our purchasing power also that we can face? Another thing is that under this method, the comparative study is possible by using common purchasing power as measuring unit. When you are using, there is a single unit, single measuring unit. It's possible to get the number of types of the studies in respect of this. It provides reliable financial information. Uh, Hence, it is easy to take management decision for formulating plans and policies. So generally, we can get it. There is a see reliable financial information that is very important because whatever you are stating in the financial report, whatever you are stating in the statement, financial statements, that is required for to take the decisions. And that is why you have to take there is a whatever the information that is provided to you, it can be used for to prepare to formulate the plans and the policies of an organization. So the CPP is also providing such kind of the information to you, that is the reliable information for preparation of the very good plans and the policies of your organization. But on the other hand, we are facing some of the limitations or the demerits of this particular method. And obviously, we are getting here, see, it is showing the changes in general purchasing power. It means it cannot consider in the value of individual and the single item. So generally, see, we are using the rule for all same, and that is the common unit that we are doing. And that is why it does not consider the changes in the value of individual or single item. Second thing is that it is based on statistical index number. And that is why which cannot be used by the most of the business firms. Number of organization, number of companies are not easily using the such kind of the method because there is a requirement of the statistical index. Then third is that it makes the problem in determining the suitable price index. How you are going to determine the price level index? How you are indicating that there is a inflation is there or there is an increase in the price level? How you are going to indicate? And that is why we have to consider that if the government is not stating like that, yes, there is a increase in the price level, and we have to calculate the particular number of prices of the particular index, then authentic index that we require for that purpose. And it is not easy to determine the suitable price index. And another is that this particular CPP method, which cannot prove itself, it is a true, or it fails to eliminate all the defects of historical cost accounting system. So number of things are there, and we are going to adopt some of the things of historical cost accounting also. Now, what are the steps that we are going to consider in respect of the calculation of the CPP? So under CPP, we are having such kind of the steps, and the first step is that calculation of the conversion factors. If we get the knowledge of this particular now, then we can get it how to solve the problems. But in this particular topic, we have considered that every particular point is to be how it is calculated. So we have taken number of examples to get the particular idea regarding to the problem. And that's why whenever we go for the steps, we are getting one of the problem into consideration that we can easily understand, yes, how we can get the values with the help of this particular available figure. So the CPP method, which is including restatement of historical figures at the current purchasing power. Now see, there is how the historical figures are converted into the conversion factors. And these historical figures, how the multiplied by conversion factors. If we are multiplying with this conversion factors, we are getting there is a such kind of the figures that we are going to expect. And that is why the first step to get the conversion factor is that, see, multiplying the historical cost figures by price index at the end of the period. Multiplying the historical cost figures by the price index at the end of the period. It means you have to multiply to whom. It means there is a historical cost figures by the price index at the end of the period. So whatever the index that you are known, whatever the price level that you are known, that you have to consider, and that can be used for the multiplication with historical cost which is available in the business. Second thing is that dividing the figure obtained in step number 1. So whatever we are getting from this, whatever figure that we are getting, it can be divided with the certain figures. Now see what will happen, how you are getting the particular conversion. And this is the formula that we are getting. Conversion factor is equal to price index at the date of conversion upon price index at the date of transaction. Now this is the simple formula that we are getting in respect of the conversion factor. It can be again shown in the another manner also, and that's why substitute formula is also there. Conversion value is equal to price index at the date of conversion upon price index at the date of transaction into existing value. So there is an addition in this particular. So what will be the existing value? How it can be determined? So we have to consider the another substitute formula regarding to the conversion value. Another third formula is also to be considered for the purpose of calculating the conversion value. So the historical cost of any asset can be replaced to the conversion value, and that is why again see there price index number of current year. So at current, what is the price index number and price index number of base year? So it may be the past. So price index number of the base year we have to consider. So current year divided by base year into historical cost of asset. Historical cost of asset. So we have to consider that what will be the historical. So there are three important formulas how we are going to settle the conversion factor. And this conversion factor is to be calculated on the basis of the given information which are related to the particular formula also. It means price index at the date of conversion, date of transaction. Sometimes it may be the historical cost of asset is also given. Sometimes what is the existing values of the particular asset is given. So we have to use to calculate for the certain given asset. And that is why I see there is a we have taken here a simple illustration for understanding better how we are getting there is a conversion value. Okay. Now see, this is one of the example. A company purchased a machine costing rupees 2 lakh on 4th January 2000. When the retail price index was 300. So see there is a, if the retail price index are not given, it is not possible to calculate the conversion. So the index are very important. And that's why this is the limitation to the inflation accounting. If we are not getting the index, we never calculate the particular inflation or any other conversion factor like this also, or inflation price also. A company purchased a machine costing rupees 2 lakh on 1st January 2000. See what's happened here. We have purchased a one of the machinery on 1st January 2000. It is costing rupees 2 lakh. Okay. The retail price index was 300. So it is given. Now the retail price index is given was 300. You are required to restate the value of machine on 31st December 2020. So we should know what will be the value of machine on 31st December 2020. See the gap, 2000 is there, 2020 is there. Assume that the price index to be at 750 on the date according to the current purchasing power. And now we can say that when you are considering the value of the particular machine on 31st December 2020, the price index is 750. So there are two things are very important here. See, there is a retail price index that was the base because it was related to the past, and that we have to consider. This is nothing but retail price index. Another thing is that yes, we are going to consider price index at current 750. So that we have to consider. So this particular past and this is the current. So there are two price indexes that we got it. Now see the formula. See the formula here. Price index at the date of conversion, price index at the date of transaction, and now here price index number of current year, price index number of base year. So here, what is the base year here? Base year is 1st January 2000. And what is the price index is here? 300. And see here, what is the current year? Current year we are getting a 31st December 2020. And what is the price index here? 750. And now this particular we have to use for the, we are going to determine the value of our machine that we have purchased on 1st January. So what will be the historical cost of asset? Rupees 2 lakh. Now see this formula that we are going to use for that purpose. What is the formula? conversion value is equal to price index in price index number of current year upon price index number of base year into historical cost of asset. So this formula that we are going to use. So this is the given cost of machine 2 lakh. This is the historical cost of asset. Index on 1st January 2000 was 300 rupees. Index on 31st December 2020 is 750 rupees. After using the particular formula, we are getting the conversion. See there, 750 upon 300 into 2 lakh, we are getting rupees 5 lakh. So it means that the value of the particular asset, it is increased to rupees 5 lakh in 2020. So this is a wide span that we are going to get. So 2000 and here 2020 is there, and in 2000 it was rupees 2 lakh, and after a long period that we are getting the value of the same machine is rupees 5 lakh. So this is what, this is nothing but there is a change in the value. This is called the inflation value of the particular conversion value of the particular asset. So it is possible to get, there is a number of machines, machines cost or number of items which are related to our financial statements, and we will get it. There is a converted value under the method of CPP, that is the current purchasing power method. So now see here what's happened here that we are going to consider. It is possible that same machine can be purchased for rupees 5 lakh. But under current purchasing power, the real price of 2020 will not be considered. On the other hand, the price changes on the basis of general price level index number are considered. So this is very important. See here the 750, it is nothing but it is an indication of the price level index. But what is the exactly the real price that we are getting in 2020? That is also one of the part of the consideration. And that is why some of the considerations which are related to this CPP method. First is that, see, there is a for conversion of historical amount, how you are going to change the value of any other item in respect of the conversion factor. So see here, multiplying historical amount with the given index, we will get there is a conversion value, and that is here again formula. This is a historical amount, whatever it may be given, that we have to consider for the purpose of getting the change or conversion. Similar way, if the items like, suppose there is a purchases, sales, wages, advertisement expenses, different kinds of the items that we are getting. So suppose there may be the number of items we are getting throughout the year. What will happen here? The average price index is to be considered for making the conversion. So now see here, what will be the formula for that purpose also? Index number at the end of the year upon average index number into converted item. So what will be the item that we are going to convert over here? That should we consider. Now there is a average price number, is average index number is also there. See how we are getting average. Average means you know that there may be the beginning and end. So we have to take, there is a average of both. How you are getting? Index number at the beginning of the year plus index number at the end of the year divided by 2. It is indication of the average, and this average index number we can use to get the particular value of or the converted value of the given items throughout the year. So can easily we can get these particular formulas into consideration, and then we will get it. There is a how to get the converted values under the CPP method. Now this is nothing but it can be known as also the mid-period conversion. So mid-period conversion, because you are taking the average, and such kind of the things are to be considered, and that's why it is very, very important. We have to consider as a mid-period conversion. Now there is another point which is very important under this CPP method is that adjusted amount of receipts, payments, and working capital. This is nothing but it is a very important how to get the working capital, what are the payments, receipts related to the business, how they are going to be adjusted. So they can be calculated on the basis of index numbers. And at the end year, monetary capital is to be calculated. It means that we can get there is a how many money we have incurred in respect of the expenses and how many we can generated in respect of this we can get it. In real monetary working capital, so this is one of the part is more than such capital amount under CPP. Now see here, the excess amount is known as profit. If it is a less than, there is a loss. So how we are getting there is a profit or loss on monetary item. So generally we can get it profit is equal to actual amount minus CPP amount. So whatever it may be the CPP current purchasing power amount that you have calculated, you can deduct from this actual amount and you will consider that you are suffering from the profit. If there is a loss, that is reverse. The current purchasing power amount, whatever it may be, from that you should deduct the actual amount. It means both concepts are vice versa. And we should know that only the one formula that can be considered profit is equal to actual amount minus the CPP amount, and vice versa you are getting the loss. Fourth point is related to that general price index number of retail price should be used. So whatever the price level indexes are given to us that we are going to consider in respect of this. So now see there is a this is nothing but first illustration that we have considered how to determine the conversion value under CPP method. Now we are going to consider, yes, what will be the profit or loss is to be considered on a certain asset under the CPP. And that's why we have taken a very simple example in this particular respect. Now see here, on 1st January 2017, a company purchased a printing machine at a cost of 15 lakh. So what is the date? Look here, on 4th January 2017. And what we have purchased? A printing machinery. What is the value of this machine? 15 lakh rupees. So on 1st January 2017, we have purchased machine costing rupees 15 lakh. It is clear? Now at the same time, the general price index number was 500. So when you are going to purchase such machine, the price level index was 500. The market value of printing machine on 31st December 2017 was rupees 20 lakh. So see, what's happened at the end of the year, when you're looking to the printing machine, the value was rupees 20 lakh. So almost there is an increase by 5 lakhs. And general price index number was 750. So on 31st December, when we see at the end of the year, the price get increased to 20 lakh rupees. And the general price index number was 750. Now what's happened to see? We have to calculate here. Either we are suffering from the profit or loss on machinery under CPP method. Okay. So this is the question. This is the example, and that we have to consider in respect of this now. Now see what will be the solution in this particular. See the formula. Conversion value of printing machine is equal to price index number current year upon price index number of base year into historical cost of asset. So the formula that we have to consider, formula we have to read, get into consideration, use the particular formula for the purpose of this. And now put the particular amounts. Price index number current year. What is the value? 750. Divided by price index number base year, 500. So on 1st January, we are having index 500. On 31st December, we are having 750. 750 upon 500 into what is the historical cost of our asset? 15 lakh rupees. So after making the calculation, we are getting the value of the conversion value of printing machine is 22 lakh 50,000. 22 lakh 50,000. But the value of printing machine on 31st December 2017, we got here as per the formula, as per the price index level, converted value we are getting here 22,50,000. But what's happened, see, but the market value of printing machine on 31st December 2017, here it is not quoted in this. We have considered that it is one of the assumption. But market value of printing machine on 31st December 2017 is 17,50,000. So what happens here? This is nothing but when you are looking to this market, obviously you are watching here and there whether the price of the particular machine is like this or not. And that's why we have taken here, there is an assumption regarding to this. Actually market price is 17,50,000. So whether we are suffering from profit or loss, that we are going to consider. What's happened, see, there is a why we are suffering from loss and why we are suffering from profit. That is also one part. Because we are comparing our price level to the market price level. And that's why we are suffering from here the loss. Now see, after making the conversion of the historical cost into the under CPP method, what's happened here? The value got 22,50,000. And what was the actual value? Actual value is 20 lakh. If you are considering that, yes, sir, this is the big one amount, 22,50,000. And this is the small amount, what was the base? And we are going to reduce the particular amount and we are suffering from profit. This is not profit because you are going to purchase the printing price at the end on 31st December 2017 for rupees 22,50,000. It means your price level gets increased by 2,50,000. Your price level is increased by 2,50,000. It means you are suffering from loss. It means that, see there, this is the question. On 1st January, you purchase for 15 lakh rupees. Okay. But when you are reaching to the market, you are getting at the end rupees 20 lakh. But see on the same line, when you are showing that in the market, after making the conversion of this particular figure, you are getting there is a 22,50,000 rupees. This is the value under the CPP method. And right now you are having actual value of rupees 20 lakh. But there, see, there is a, you have to get, there is a more price under CPP method. And that's why you are suffering from loss under CPP method by 2,50,000. So this is nothing but we can say like that due to the price level index that we are facing the particular problem. So generally see there is a market price here also we have considered 17,50,000. And see there is a, we are getting, this is the one of the assumption that we have considered. But when you are facing there is a actual positions to this particular calculation, calculated figures and whatever the actual figures which are related to this, we will get there is a, either we can suffer from the profit or loss. This is one concept. This is one concept, the conversion value of any historical cost. This is one concept under the CPP. Now, second concept is that monetary and non-monetary accounts. Monetary and non-monetary accounts. It means that we have to classify the assets and the liabilities under the CPP method into two groups. One is the monetary item and another is a non-monetary items. And what are the monetary items that we have to consider? And these monetary items which are related to this liabilities, assets, and how you are going to consider C. So number of there is a, what are the items which are related to that? It consists of cash, bank, bills receivables, debtors, prepaid expenses, account receivables, investment in bonds or debentures, accrued income. So these particular assets that we are going to get in monetary items. On the other hand, we are having some of the liabilities also, and they are called as the monetary items like the creditors account payables, bills payables, outstanding expenses, notes payables, dividend payables, tax payables, bonds and debentures, loan advances, income, preferential capital. All these are known as the monetary liabilities. It means the assets and the liabilities. Monetary items are classified into assets and liabilities, and some of the assets that we are going to get in respect of these monetary items to understand, some of the liabilities that we have considered to understand the concept of the monetary item also. So what are those that we are going to consider in respect of this? Now see, under this particular CPP method, we are going to reflect the values of different kinds of the items which are showing in the balance sheet. So what will happen to see now? Some of the figures that we are going to convert into the CPP, how it can be reflect in the particular balance sheet also. Now see, there is a historical cost, and this historical cost into index at the end upon index on the date of balance sheet. This is one part. Secondly, here we are getting, there is a non-monetary items that we are getting. So what are the non-monetary items? It means that which are not fixed monetary value, which are known as the non-monetary items. Generally, we can see like that, whatever it may be, may not be considered under the heading of monetary, that are called as the non-monetary items. And now see, there is a such things that we have to consider, because all these particular items of the assets of the liabilities which are representing what is the purchasing power of us. So the non-monetary account which are containing the land, building, machinery, vehicle, furniture, inventory, equity share capital, irredeemable preference share capital, accumulated depreciation. So these particular, see there, what's happened here? If you see, these are the all fixed assets that we are going to consider, but sometimes inventory is also there that we have to consider. Equity share capital, irredeemable preferential capital, accumulated depreciation. So these are nothing but we are getting, there is a non-monetary item. So you have to know that which are the monetary items and which are non-monetary items related to this. So the non-monetary items are converted under following four heads. So what are the heads? See, first of all, fixed asset. Second is depreciation. Third is stock. Fourth is shareholders fund. So these are the four are very important. This is nothing but under this non-monetary assets, how we are going to convert. So under fixed asset, depreciation, stock and shareholders fund. Now see, there is a fixed assets. So what is the value of fixed asset at historical cost? That is considered. Historical cost figure that we are going to get, it is multiply with the ratio of index at the end and index on the date of acquisition. When you acquire the particular asset in the business, and while at that time, what was the index? So you have to, and you should cost figures multiply with ratio. That is index end and index on. Second thing is that depreciation. In case of depreciation, you are going to get here accumulated depreciation. Accumulated depreciation into index at the end upon index on the date of acquisition. See here, it means there is a historical, like the historical asset, fixed asset, like that also the same. You have to consider the value of only the accumulated depreciation and multiply with the same ratio. Okay. Now see here, stock is there. What's happening to stock? While converting the historical cost of stock, the first step, which is going to find the period during which the items in stock were purchased. And then a price index representative of price level during such period is identified. Now see here, converting the historical cost of stock. the first step. It means there is a first step that we are going to follow. So what will happen here? To find the period during which the item in stock were purchased. When you are going to purchase the particular stock, that is very important. And a price index representative of price level during such period is identified. So these two periods are to be considered while you are determining the stock. Now the shareholders fund. You know, well, there is a what is shareholders fund. Now it can be considered as a net worth of the business like that also. But how you are going to convert the shareholders fund, and this shareholders fund is nothing but we can say that share capital is also there. It is inclusive of accumulated reserve. Accumulated reserve. It means what will be the profit, what will be the general reserve that can be considered. It is a part of our share capital. So this particular shareholders fund, when you are going to get there is a accumulated reserve on the historical cost figure into CPB figure by multiplying with any specific index. Now see here. So it is not possible to convert shareholders fund on historical cost figures into CPB figures by multiplying with any specific index. So this is we have to consider. It is not possible to convert the shareholders fund, whatever we are going to get here. But it is arrived by subtracting all liabilities at CPP, current purchasing power, from the asset both fixed and current at CPP. It means that you have to get the all liabilities under CPP. Okay, subtracting all liabilities at CPP from there is a sum of assets. Sum of assets is meant sum of asset, fixed asset as well as the current asset under CPP. So simply we can say like that asset minus liabilities. And these assets are called as the fixed asset and the current asset under CPP method. And we have to deduct all liabilities under CPP. Then we are getting there is a shareholder fund at CPP. Okay. Now there is a gain or loss on monetary item. How you are going to consider by either we are suffering from gain or loss on monetary item. And that is why here we are getting there is a one of the example into consideration to determine yes what will be the steps that we have considered 1, 2, 3 under the monetary items. Now see here how you are going to get the particular example into understanding. This is the information which is related to the Messer Atharv Limited on 31st March 2019. This was the past position. This is the current position. Now here we are taken there is a cash, book debts. Book debts mean debtors. Now creditors are also there. It means cash and the book debts are the current assets. Creditors and loans are other liabilities, current liabilities also there. And we got here the retail price index number on 1st April 2018, 240 it was. On 31st March at the year end, we are getting a 360 and average for the year it is 300. How you are getting the average for the year? 240 plus 300. It is the beginning, it is the end. So beginning price index plus closing price index. 240 plus 360 upon 2. You will get here 300 rupees. So average for the year is 300. Now we have to calculate here the net monetary result. Net monetary result. So how you are getting now see. Monetary liabilities at the beginning. Monetary liabilities. Liabilities means creditors and loan. Take the addition, take the sum of his beginning. It means the 1st April 2018. It is the beginning. 31st March 2019 is the closing. It means that this is the beginning and this is the end. Okay. So it means that see their monetary liabilities at the beginning of the year 18,000 plus Loan is here 40,000, 18,000 plus 14,000, 40,000, that is 58,000. Now we have to calculate here the CPP value at the end of the year. So 58,000 into index at the end of the year upon index at the beginning of. So at the end we are having here and at the beginning. At the end 360 is there. At the beginning 240 is there. So 58,000 into 360 upon 240. After making the calculation, we will get rupees 87,000. Now see here, increase in monetary liability during the year. We can calculate here. What happens here? Creditors, see here, 22,000 and loan is also 40,000. So it is there is no increase. Only we are finding that there is an increase in creditors. So creditors of rupees 22,000 at the end, it means we have to deduct the beginning price 22,000 minus 18,000. We are getting here 4,000 rupees. But in respect of the loan, we are having the same amount at the beginning as well as at the end. So 40,000 minus 40,000 we are getting here. So there is a no increase. Okay. So the total increase in the monetary liabilities is rupees 4,000. Total increase in the monetary liability is 4,000. Okay. Now we can calculate here CPP value at the end. So 4,000 it is the increased value in total liabilities. Okay. Into again here index at the end of the year and average index for the year. We have to replace here the formula. What we are getting here, index at the end of the year upon average index for the year. It means 4,000 into 360 upon 300. This is the average index. Now make the calculation and you will get it. There is a value that is rupees 4,800. Now what's happened? See, the CPP value of monetary liability at the end of the year is 87,000 plus 4,800. So what's happened? 87,000. From where we brought the 87,000? That is also very important. See here. This is the calculation that we have made. And this calculation is indicating that 87,000 rupees. Okay. So this is nothing but the monetary liability of all the liabilities. This is indicating that CPP value at the end of the year 87,000 and now there is an increase. This is CPP value at the end, increasing value. It is indicating 4,800. Make the sum of these two, you will get it. CPP value of monetary liabilities at the end of the year 91,800. Okay. Now we have to deduct from this 91,800. What is the actual value as per the historical cost account? What was the actual value? See, at the end of the year, 22,000 rupees. This is the creditors value and 40,000 rupees is the loan value. So the sum of these two, we are getting here 62,000. And now 91,800 minus 62,000, we are gaining here, see there, gain on account of increase in liabilities, we are getting here 29,800. So this is monetary gain on account of increase in liabilities. Due to the increase in the liabilities value under CPP, we are gaining over here. Now second, monetary asset at the beginning. As like this, we have to continue the same. Now see what are the assets are given here. Cash is given 3,500. Book debts are given 25,000. Book debts mean debtors. 3,500 plus 25,000. And here see in case of this end of the particular year 4,500 plus 30,000 is there. Okay. Now we are looking to this monetary asset at the beginning. At the beginning, we are having cash rupees 3,500 and debtors, that is the book debts of rupees 25,000. So it comes to 28,500. Now again, we have to use the same formulas related to this. I think that here 360. CPP value of the above end end of the year 28,500 into 360 upon 240. 360 upon 240. So it comes 42,750. Now see there, increase in monetary asset during the year. What's happened here? 4,500 minus 3,500. Here. 4,500 minus 3,500, we are getting there is an increase by rupees 1,000. Similar way here, 30,000 minus 25,000, we are getting increase here 5,000. So almost there is a 6,000, it is the increase in monetary asset. Again, you are going to consider CPP value increase in at the end 6,000 into index ratio 360 upon average 300, and you are getting amount 7,200. So what will be the CPP value of monetary asset at the end of the year? At the end of the year, 42,750 plus 6,000. Sorry, 7,200 that we have calculated over here under CPP. So 42,750 plus 7,200, it comes 49,950. Now we have to deduct again as same liabilities. We have to do the process in case of the asset same. Actual value as per the historical cost at the end 4,500 plus 30,000. So 4,500 and 30,000, it comes 34,500 rupees. So we have to deduct it 49,950 minus 34,500. You will get here 15,450. So we are facing here the net monetary gain is that net monetary gain means whatever you are getting the liabilities and whatever you are getting there is a assets under this particular CPP that you are going to consider. So see, liabilities are more than assets, and that's why we are suffering from loss. That is the loss. So the monetary loss on this particular account, it is 15,450. And here see the monetary gain is there. What's happened here? Monetary gain 29,800 minus 15,450. You are getting here 14,350. So this is the nothing but we are getting the such kind of the reflections in the calculation of monetary liabilities, monetary assets, and whether we are suffering from this particular all these particular things that we can consider. Now see here monetary gain on account increase in liabilities is there 29,800, and from this 29,800 we have to deduct the what is the loss. Here we are getting 15,450, and we are getting here the net monetary gain is that 14,350. So this is the third point that we are going to consider in respect of this calculations under the CPP. Now there is another part that we are going to consider valuation of cost of sales and inventories. In the next lecture, we can continue the same and see what are the CPP and how we are going to get the valuations under the CPP, because fixed asset, how you are going to consider depreciation, how you are going to consider stock is considered, shareholders fund, how you are going to consider. And when you are looking to this particular, some of the examples which are related to the CPP, these are the small parts. These are the small parts you have to determine while preparing the one of the restatement, financial statement, we can say balance sheet or the profit loss account. So before that, we have to get such kind of the particular formulas into consideration, and we should get some of the part into inflation accounting. Now, fourth point is the valuation of cost of sales of inventories. And from this, we can continue the next lecture. Till then, you have to wait for this. Okay, thank you, sir. Devri sir? Yes.
Hello.
We are going to stop.
Okay. Thank you, sir. Just I would like to propose the vote of thanks, Dr. A.G. Suryavanshi sir. Sir give us valuable their time and share their experience on inflation accounting. Really, this session useful and fruitful to our students. Thank you, sir, on the behalf of Center for Distance Education, Shivaji University, Kolhapur. Thank you, sir.
Thank you, sir. Thank you.
स्टुडंटना एक सूचना अटेंडन्स फॉर्म भरणं आवश्यक आहे तर सर्व विद्यार्थ्यांनी तो अटेंडन्स फॉर्म भरावा
हे बरं पडतंय त्याच्यावर
हॅलो सर
कानात आवाज घुमतो त्याचा
होय त्रास होतो सर
त्रास होतोय त्याचा मी कधी वापरत नाही कधी त्याचा त्रास होता डायरेक्ट
त्रास होतो सर आणि संध्याकाळी दिन असं
किती विद्यार्थी होते ना
हॅलो सर
ओके तर उद्या पण जे काही टाइम शेड्यूल आहे त्याप्रमाणे लेक्चर होतील ओके उद्या नेक्स्ट डे आफ्टर टुमॉरो वी विल कंडक्ट सेशन ऑन financial instrument. This session, for this session, we may invite Dr. K.V. Marulkar sir and all students will inform you. You should attend that session. Okay. सर्व विद्यार्थ्यांनी परवाचं पण सेशन अटेंड करा त्याचबरोबर टाइम टेबलनुसार जे काही सेशन होतील ते आपण सर्वांनी अटेंड करावेत
एक्झामची डेट फिक्स कळली आहे
अजून एक्झामच्या डेट वगैरे कन्फर्म नाही आहेत जशा कन्फर्म होतील किंवा शेड्यूल येईल आपल्याला व्हॉट्सअपच्या माध्यमातून कळवण्यात येईल त्याचबरोबर आपणही सर्वांनी जी आपल्या युनिव्हर्सिटीच्या वेबसाईटला जे काही टाइम शेड्यूल आहे एक्झामिनेशन टाइम शेड्यूल त्यामध्ये सर्व विषयाचे टाइम टेबल हायपरलिंक केलेले असतात सेंड केलेले असतात तिथेही जाऊन आपण व्हिजिट करून तिथून डाउनलोड करून देऊ शकता त्याचबरोबर मला जे अवेलेबल होतील ते मी व्हॉट्सअपच्या माध्यमातून आपल्याला सर्वांना सेंड करेन
सर टेंटेटिव्ह डेट कारण की मी जॉबला आहे सर ऍक्च्युली मला सांगायचंय किती तारखेला
साधारणतः 15 ते 20 जून नंतर होतील असं शक्यता आहे
ओके सर ओके चालेल थँक्यू
आता मीन टाइम मी शक्यता सांगितलं आता काही जसं शेड्यूल येईल त्यावर फायनल ओके
सोडलंय काय
okay next day we will take lecture on advanced accountancy paper 7 okay and management account right now we will stop here thank you attendance सर्वांनी please भरा
मोबाईल कसा ठेवायचा असतो हो, ह्यात पाणी गेलं सगळं हो, आपोआप खाली व्हायला लागलं हो.
हॅलो. हा सर. हा बोला की.